Hey, replay watcher, thanks for joining us. This is going to be a fun morning here. It's Friday, March 5th. I've got a lender, Chad Johnson, to join me to answer some questions about the mortgage process. If you are watching on the replay, please share this, like this, retweet this, do everything you can to get people to come watch this. That's what we're trying to do. We're trying to have fun every Friday morning, learn about the real estate business. Should we get started?
Let's hit it.
Okay, listen to this. Okay, welcome back to another episode of the Realty Reality Show. I'm going to do this each and every Friday morning, and I'll be live on Facebook and YouTube talking about a different aspect of the real estate business. And today, I should probably remove this part. It's Chad Johnson. He's a loan officer, a mortgage guy in my office. I am Chad Eckert. I am working out of the 50th and France office for Edina Realty in Edina, Minnesota. My phone number and information is scrolling across the bottom. If you need a buyer's agent or agent to sell your home, I'd be happy to help you do that. If you need a mortgage guy, well, I brought one here today, and we can talk about the lending process. Chad Johnson, good morning. Thanks for joining me.
Good morning, Chad. Thanks for having me. Appreciate it.
I, could walk down the hall and say hi to you. You're here with me. We're both here. We're 6 feet apart.
You probably hear me.
Yeah, right. No, Chad, I got 10 minutes. Talk to me about this basics of home buying and how to buy one.
I do. So, the most important thing is you need to start early in the process, right? We need to figure out what you qualify for. And when we do that, there's several different things we're going to look at. So we'll start with income, assets, credit. We'll talk about what payment you're comfortable with. We'll talk about what your max payment is. That way, when you're with Chad out looking at houses, you can say, hey, I know I can buy this house. I know this is about what my payment's going to be. Or you can say, whoa, that house is way too expensive. Let's not waste our time. Let's just focus on where we're comfortable. So I think that's the most important thing to take away from anything we talk about today. Start early. Let's work out the math. It's all numbers. It doesn't lie.
Okay, do it now. Do it today. I call Chad Johnson or go to his website. There it is on the website or on the screen. It says Chad B. Johnson. There it is, .com.
There it is.
Hey, Chad. Okay, I got a dozen questions or so for you, and I wanted to ask you to start. What does it take to buy? How much money do I need to buy a house?
Yeah, people are often terrified that they don't have enough money to buy a house, right? I mean, yes.
That's why they're always renting, right?
Yeah. I mean, yes, the 20% down payment is, what most people think you need to have to buy a house. Totally not true. There's all kinds of programs out there where you can do 3% down, 5% down. There's even programs out there where you can do $1,000 out of pocket and have a down payment assistance loan behind it if you qualify and meet certain criteria for it. So don't ever let not having enough money be your issue. Let's just take a look at it and see what we can mix and match to come up with the solution to get you into a house.
So, but then let's just say I have money and I can buy a house. Well, how much should I afford? How much can I afford? What's a good amount of money to be putting each month into your mortgage payment? Is there a percentage? Is that kind of up to the individual? Do you have a rule of thumb?
Yeah, it's really up to the individual, Chad. I mean, it's, how much money do you make and what are your other bills? And then what are you comfortable with going towards your housing payment? Lenders like to see your total bills be somewhere in the mid 40% range of what your total income is. There's programs out there that'll let you go to 50% of your total income. Again, if you're comfortable with that payment, we can get you approved for it, but it's really what feels good to you. We always encourage everybody, don't become house poor. I mean, struggle and feel stressed out about making your mortgage payment, that's not a good thing. So, I mean, we'll talk about comfort range. We'll show you what your max is. Most of the time people end up somewhere in between, to be honest. So,
okay. So then what does the process entail? If I'm new to the whole home buying thing. I've been renting, and I'm curious now. I've seen a couple of my friends buy a house, and they've made money on it, and they're enjoying the life of a home ownership. What do you do? How do you do it? Do you see an agent first? Do you meet with you first? What's the whole process like? Meeting with you, getting a pre-approval.
Yeah, like I said before, you should really start with the mortgage approval portion of the process, right? That's going to give you a roadmap of what you should be looking at while you're working with your agent and you're out looking at houses. So when we do the application, all that can be done online. It can be done over the phone. We're getting to the point in life where we can schedule face-to-face appointments again, but certainly online you can knock that out in about 10 minutes, about 10 minutes over the phone as well. When we do that, we'll get all your income information. Where do you work? What do you make? How long have you been there? Who do you bank with? What are your balances? And we really kind of take what your individual scenario looks like and then match it up to the best loan program that's available for you. Don't worry about getting all the paperwork that you need up front when we're doing the initial approval. We can get it all later. We're doing all ballpark stuff at the beginning, and we'll fine tune it as we go. So 10 minutes of your time, we can buy a house.
Okay, so then how long does that pre-qualification last? Do you have to do it again in 6 months if you don't buy a house?
No, great question, Chad. So once we have that initial approval back for you, it's good for up to 120 days. Some scenarios, it's 180 days. And really all that is the date on your credit report. So if we hit that magic 120 or 180, depending on the loan program, we just have to pull a new credit report. You don't have to redo all the paperwork. We'll need to get updated pay stubs and bank statements as you get closer to closing, but you don't have to redo the entire process.
Okay. Now, I work on commission as a realtor. So do I need to wait 2 years of having commission sort of money coming in for a loan officer like yourself to approve me to buy a home? Or what do I do as a guy making commission?
Yeah, there's a lot that factors into that, Chad, right? I mean, typically the answer is going to be yes. You need 2 years of commission income, same for self-employed. That being said, there are a few specialty programs out there where you can get away with a year of self-employment and still qualify for a mortgage. It's not the standard 30-year fixed product, but it's something that's available. And again, don't be afraid. Let's at least dig into it and find out for you.
Okay, so then for someone like me that has 2 years of history, but maybe I'm not very good at my job right away, and now I'm getting better at my job, and now I've got future money coming in. Can you use that future commission as a way to approve me for a higher loan?
I can't use the future commission, but what they do is they're going to take a 2-year average, right? So maybe in a scenario in 2019, you didn't have the best year, but you had a great 2020. We'll take the average the two, and that's what we use for your income. So underwriting's actually going to ask also to see a year-to-date profit and loss to show where you're at for the year. That's where that future income comes into play. Now, we can't count it to qualify, but we can show that you're still doing business and that you're doing the right things and you're still going to have money coming in.
So, and then credit score is obviously important and something you factor into deciding whether I'm fit for a loan. How do I improve my credit score? Do you work with buyers to make sure that they've got a good credit score, or how does that work?
Absolutely. So there's programs out there where you can get approved for a mortgage down to a 580 credit score. So you don't need to be perfect to get approved, right? Mortgages are kind of like car loans or credit cards. The better your credit, the better interest rates you're going to get, right? So when we run that initial credit report, we'll take a look at it and say, hey, you had this 30-day late that, was close to a year old. If we try this again in 6 months, let's just pick that as a day, your credit score is probably going to increase because that late payment's over a year. And then we'll take a look at what the differences in rate would be. The biggest thing on credit to keep your score high is make sure you're making your payments on time. That's the biggest thing that anyone looks at. And then the second thing is, what are your balances compared to what your limits are? So if you have a credit card where your limit is $5,000, you want to make sure that balance is roughly a third of what the limit is. Once you go over a third, it starts to affect your credit score a little bit more. Once you go over half, it gets even a little bit worse. maxed out or over is a disaster for your credit score. So just got to pay attention to what those things look like.
Now, how fast can you close a loan? Because that's important in this market, trying to get an offer that can close quickly. It makes the seller more favorable on that offer. How fast are you closing loans these days, Chad?
Yeah, our average right now is just under 30 days, right? There are some programs that'll take 45 or 60 that are more specialty programs, but I would say 95% of our loans that we do, Chad, we can close in 30 days, which, like you said, that's really important when you're making an offer in a competitive market, is if the seller wants to close quick, you want to make sure that you can close quick. So we kind of keep that in mind when we're running those initial numbers and that initial approval to put you in the best spot for a strong offer.
Okay, everybody, we are live on the internet. It is Chad Johnson from Edina Realty Mortgage. If you're halfway through, this is the lender process. This is episode 3 of the Realty Reality Show. It is every Friday morning live on the internet. It's great. And we're talking to Chad about things that are important in the lending process, the mortgage process. Part of that is loan options. There's a conventional, there's an FHA. You could be a veteran and have a VA loan. There's renovation loans too. There's all different options. What's the standard? It's the conventional versus FHA. What's the difference between those two?
Yeah, so the easiest way to describe it is a FHA loan is a product that's more backed by the government, where a conventional loan is more of a standard bank type of program. The real advantage to an FHA loan is the credit requirements or even credit score. There's a little more wiggle room in that, right? It gives you the option of a 3.5% down payment. The conventional loan, again, assuming you qualify, you can do as little as 3% down, but you need to have a little bit stronger credit, a little better payment history. We always compare those two side by side and see which one works best for you. So interest rates are, usually they're about the same. Some days FHA is a little bit better, but again, we'll compare them and see which one works best for you.
So what does a mortgage payment include? It includes the taxes, what does it all include? You just pay his money to you, and then somehow you're safe to own this house?
It doesn't really come to me, Chad. You know that, right? When we calculate out your mortgage payment, we're going to include the principal and interest, which is the actual money that you owe to the mortgage company to cover how much you borrowed. Second thing we'll put in there is your property taxes. We'll put in your homeowner's insurance, and then if you buy a townhouse or a condo, we'll show you what that payment looks like with the association fee as well, so you know what your total monthly housing expense is going to be. The association fee gets paid separately outside of the mortgage payment. You write a check to the association for that. But with those numbers, we're going to show you the total all-in numbers, so there's no surprises at the end.
So you mentioned rates. Now, that's a fun topic because the rates are so low. They're historically low. It's kind of funny looking at the trend that it's happened over the last few years. So what's up with these rates? How do you lock a rate at a specific time? Can you buy down the interest rate? Even, I don't know why you would or need to, but what's going on with rates in 2021?
Yeah, so let's talk about how the process works first, and then we'll talk about what's going on. So typically in interest rates, once you have a signed purchase agreement from the seller, so you've written your offer with Chad, the seller's accepted it, we've got a final sales price, a final closing date. At that point, we're going to lock your interest rate. We can do a 30-day, a 45-day, or a 60-day lock with no additional cost to you. We can also look at paying points or buying down that rate. So what that means is you pay a little bit of extra money up front and you get a lower interest rate. So we always go through and say, hey, for this dollar amount, that'll drop your interest rate to this. That makes your payment this new amount. And then we'll figure out how long it takes you to recover that cost. So if it only saves you $8 a month to buy it down and it takes you 10 years to recover the money, probably not a good investment to do that. So what's going on in the market right now, Chad, is kind of crazy. So do me a favor, take your coffee cup that you have, hold it up, and just tap on the lid a little bit and look what happens to what's inside there, right?
Oh, it's like Jurassic Park.
Little swirl, little bubble, right? That's typically how the interest rate market works. It's fluctuating, right? Rates can change every day. So if we talk today, the interest rate on Monday might be different, right? Might be higher, might be lower. could be the same. That's how the typical market works, okay? Chad, hold your cup up again for me.
Okay.
Smack it on the a little bit harder. Yeah, do
exactly.
That's what's going on in the interest rate market right now. So seeing a lot of volatility in rates. A lot of unknown what's going on with the vaccine and the economy, right? Is everybody going back to work in 2 weeks, or are we going to have to ride this out to the end of the year, right? Federal Reserve talked yesterday about the concerns of inflation. You know, we had a day last week where the stock market dropped almost 600 points in a day. So we are seeing rates doing this right now, right? So it's really important that when we have our initial conversation, we talk about live interest rates, okay? And again, what it is today, it could be different on Monday. It could be different this afternoon by the end of the day. So when you are looking at mortgages, keep in mind that interest rates are a moving target, and it's important to get that updated information, whether it's from me or another loan officer you're working with. Make sure you're in constant contact with each other. I know, Chad, when you show a house and I run numbers for somebody, you know, I'll always give them that live rate. If they're going to go look at a certain property tomorrow, I'll send them numbers today so they know what it looks like before they even get there. So, but kind of a fun market right now in interest rates.
Yeah, it's it's fun for some people.
For some.
Okay, now, yeah. So we're almost to the end here. We're trying to make this quick thing every Friday morning, and we're talking the lender process. We got a lot of questions. If you have questions, you're happy. Go ahead and chat alongside, ask them, and we'll answer them. One of the questions I had is that it's hard to find the house that you want because the inventory is so low. So can you sell before you buy, even though you need the proceeds of your house to purchase your future home?
Absolutely. So
how do you do that? That seems crazy.
Yeah. So there's a product out there called the bridge loan where we can access the equity in your current house to use as the down payment on the new house. Okay. Now, when you do that, you have to qualify for your current house, the new house, and that bridge loan. So remember, we talked about low to mid 40s for that debt ratio before. That's where this really comes into play. So we can make it work, assuming we can get you to qualify for it. So again, don't let your particular scenario freak you out or cause any, real concern. Let's just take a look at it and see if we can make it work. I mean, the worst thing you're gonna find out is you got to sell before you can buy. Best case, we figure out how you can buy before you sell. So, it's all math.
So I think the key takeaway is to just talk to the loan officer, give you, Chad Johnson, Edina Realty Mortgage, a call, and just start the process of getting an information. Knowledge is power in this world, so just get that knowledge of what you can afford to do. There are things that you should not do, though, Chad. What are some no-nos leading up to buying a house? Or if you're in the pending period, should you buy a car?
No. So here's what I always tell everybody, Chad. It's important that we keep everything as close to exactly the same as the way we originally approved your loan until you close on your loan, right? So while we're going through the process, it's important to, don't quit your job because we need your income. That's what we qualified you on. If you're going to get a new job, make sure we talk about it up front before you leave your current job. Depending on what your pay is and how you're paid, it might not be an issue. It could be a disaster. It could cause your loan to get declined. So again, communication, right? Don't go buy a new car, especially if you don't have a car payment right now, and all of a sudden you throw $600 into the mix. That could cause an issue. So if you're
what if I want to buy furniture though, Chad? Can I do that?
Same thing, right? As soon as you open a new credit card, it sends a trigger to the credit report where now we have to get the information on that account. We have to add that balance and that payment into your debt ratio, which can change your approval. So, try to avoid all that stuff. If it absolutely has to be done, just reach out. We'll walk through the scenario and see if it's going to affect anything or not. But again, communication with the lender is really important in that kind of stuff.
Okay, a couple more questions now. If I need a mortgage, I just go to Google, right? And I just find one of those calculators. I just plug in my information, and that's good enough. My agent will take that information and show me houses off that.
Yeah, so you're right. Go to Google, but then put in my name and go to my website. That's the way you do it, Chad. So, here's the difference between just looking at rates online and getting actually pre-approved. I mean, it's real easy for companies to throw out, a stupid low interest rate number and say, you could be approved for this. And you put in your scenario in their online mortgage calculator. That doesn't mean you're approved, right? So we need to do the credit report. We need to talk about your income and assets. That's the 10-minute process I was talking about in the beginning, Chad. It's important to take that time and really dive in to make sure you are approved. So when the buyers are out looking for a house, Chad's going to ask me for a copy of a pre-approval letter. And that's a letter I'm going to give him that says, Joe Lunchbucket is approved to buy a house for this amount of money at this interest rate, and here's the monthly payment. So, and that's what the seller is going to want to see when you write your offer. If you just say, hey, I went online and it looks like I can get approved, no one's going to take your offer.
It's going to be tough to get that agent to show you houses. So you got to get pre-approved. Yeah. You got to go to a mortgage lender. And if you do meet with the mortgage lender, Chad, what should we be asking them? Are there specific questions to ask your lender, or should you shop your lender? I mean, is everyone created equal in this world?
Chad, that's also a good question. Everybody's different, right? I don't have I'm not going to say, hey, if you work with me, you can't shop. I mean, that's not the truth, right? Check it out. Make sure you're getting the best deal. Make sure you're finding the best program. Where you're going to find your difference in lenders is what programs they have available, right? So if you just go to ABC Bank and apply for a mortgage, that bank has just their loan products. They don't have, XYZ's products or 145 Bank's products. They have just what they have to offer. That's it. When you work with me, in some loan scenarios, I have almost 20 lenders that offer the same type of product that we can mix and match with your exact scenario to find you the best interest rate.
Exactly. You've done it for me. You've done it for my mom. You do it for everyone in this office, the 50th and France office at Edina Realty Mortgage. Thanks for joining me on the Reality Realty show in the Friday morning program. Where do we find your information? You're Chad Johnson. Why don't you just give it one more time so we have it?
Yep. My website is Chad B as in boy Johnson, chadbjohnson.com, or my cell number is 651-260-6577. Be happy to help anytime. Call, text, email, whatever's easiest for you, and we'll see what we can get you into for a house.
Great. Thank you, Chad. It was a nice Chad Squared episode. We'll have you back on. Maybe we'll dig deeper into specific parts of the loan process. And join me next week, audience. Thank you for watching this. Next week, I got a topic, Chad, pre-listing your house. What are the benefits to selling your home as a pocket listing? You think it's crazy in this market to do that because you can put it on put a sign in the yard and they'll flock to it. But I think you need to pre-list. And I'll tell you why next Friday morning. Join me then. Thanks for watching. Let's play this music one more time and get out of here, right, Chad?
Thanks, Chad. Have a great afternoon.
All right, man. All right, thanks again, man. Talk to you later.
See you later, bud. Thanks.